GDP. Markets moved on the inflation data, Michelle, but economists moved their growth outlooks because of both inflation and disappointing January retail sales. I want to show you what happened here. There was a pretty big markdown in Q1 GDP. There it is right there. 2.6% now is the running rate for the first quarter, down 0.3% with a range of 2.3 to 3.6. They even marked down the fourth quarter of 2017 by 0.2 to 2.5%. Bank of America now at 2%. Atlanta Fed coming down by 0.8% to 3.2. They've got a problem
and
with
they
their
were
model.
High on the street.
They were
very
already high for it. They've got a model problem here. Meanwhile, markets initially sold off hard on the inflation numbers before recovering. Take a look here at what the numbers were. 0.5, we're looking for 0.4 in headline, 0.3 on core, we're looking for 0.2. The year-over-year rates, though, are unchanged, 2.1% year-over-year and 1.8. Maybe the algos traded on the month-over-month, and the humans came in and traded on the year-over-year. Let's take a look at where inflation is hot right now. 5.7% gasoline, that's probably coming down. Apparel, really surprising to the upside. That looks like an anomaly to a lot of folks. Commodities up a little higher, that could be the dollar. Medical care, though, 0.4%. Let's look where inflation is not. And you can see airline fares down 0.6%, I believe. Is that right? I don't think they have that full screen back there. But just there it is. Thanks, guys. Prescription drugs down 0.2%. Housing and new vehicles down 0.1%. This will, though, give ammunition to the hawks at the Fed to do more rate hikes this year, especially because we have coming lower unemployment, we have strong job growth, and those tax cut stimulus working their way through the system. So I don't think the fears of inflation are misplaced. Perhaps the overall morning reaction was.
You know, we've been spending a lot of time this week talking about stimulus that is in the economy, or that we think is in the economy, in the form of tax cuts, higher spending, and so forth. So with that as a backdrop, why are economists, several of them, lowering their predictions for GDP growth this year?
What we have is we have these are tracking forecasts. So you start off here and then the actual data come in. January was disappointing when it came to retail sales. So the consumer is not seen quite as healthy. Look, 2.6 is still a good number.
Yeah.
I think it's going to be a little bit of time before people see the tax cut in their paychecks, before the tax cuts works its way through corporations to individuals, and you get the kind of spending or Keynesian side of that. And then it's going to be many years till you get the supply side of it, which will be companies buying equipment, machinery, and raising productivity of workers.